Hey, my name is Darcy Ongaro, and you're watching the NZ Everyday Investor. Today, we're catching up with Cole Hauptfuhrer. He's the founder of a company called findfatfish.com. No, we're not teaching you how to fish. It's nothing about fish today, but it's everything about investing, how to be an intelligent yet lazy investor. Sounds kind of dirty, doesn't it? Sounds kind of wrong, but I promise you, it's not. The financial community is full of people who are know-it-alls, to be blunt. And there is something to be gained by surrounding yourself by a lot of different points of view. But often it's very, I don't know, it's kind of bland. It's a very bland fish bake. You know what I mean? It's not actually spicy enough. It's not salty enough. And it's not almost controversial enough, I guess, to get you really thinking and challenging some of the things that we think is true about when we invest. For example, is emotion allowed when you're investing? When is it appropriate? What's the deal with fear? Good, bad, or otherwise, right? So there's so many things that we're going to be talking about today which may challenge you, and that's a good thing. You're allowed to be challenged, and you're allowed to actually back yourself with what you believe in when you invest. So findfatfish.com, encourage you to check it out. And before we begin, I want to acknowledge our partner, Hatch. Hatch makes it easy to invest in share markets. I personally use Hatch to invest in the US share market. It's awesome. And there's a special deal as well. So click on the show notes. You'll see a little link there. If you sign up to Hatch for the first time, you're going to get a free $20 credit for the first $100 that you deposit. So check it out. Remember also that definitely today, none of this is financial advice. If you want a financial advisor, then go see a financial advisor for financial advice. Today, we're just going to be talking about stuff that will hopefully jog your thinking, challenge what you believe in, and hopefully encourage you to take action in some way. And then lastly, before we begin, make sure that you give us a big fat old like, a subscribe, maybe even a comment here or there. Share us with your granny, doesn't matter. But I hope you enjoyed today's episode. It's going to be a good one. Let's get started. Hey, welcome to the NZ Everyday Investor. My name is Darcy Ongaro. And today, very special guest, Cole Hauptfuhrer. Welcome, Cole.
Thanks for having me.
So today is going to be just a general conversation. We connected a little while ago. I saw that you had a triangle nose, just like I had a triangle nose on an article that was written care of Hatch. So I thought I'd reach out to you because I read some of your stuff when I saw that. And I thought, man, this guy is, you feel like a kindred spirit, right? So why not have a little chat to see where it goes? So thanks for joining me. Now, for our audience, where are you based? What's your background?
I am based in Wellington, New Zealand. I'm from New York. And my background in terms of investing, I guess, is that my dad taught me how to gamble on NFL games when I was 6. And then through the same prism, very similar prism, taught me investing when I was 22. And at that time, actually, I was a junior in, as you guys would call it, uni. And I was studying creative writing, screenwriting, aggressively offensive comedies. And he, having run a hedge fund, was so disturbed by the decision that he called me up and he was just like, listen to me carefully. A man can leverage money or a man can leverage time, and you need to learn how to make money with your money because Lord knows you won't make money with your time. And he pulled me out of school and he taught me investing an hour a day on a cruise ship that he was orbiting around the world on and subsidizing through 2 synergistic passive income vehicles, which was a great early education for me, just seeing how some people can kind of puppeteer that. And by the end of the second hour, I had everything that I needed to invest successfully in stocks out of the gate. What was funny about it was that he was teaching me this in a sort of dogmatic way with the intention of having me invest just like him. And he kind of had the standard old man mentality of how the world is going straight to hell, therefore invest in oil and gold. And using exactly the same principles, like 4 bullet points, all I could hear was invest in Nintendo before the Wii comes out because it's going to be awesome. And that worked out beautifully. And then using the same philosophy, rolled that into Google and Apple during the recession, into Netflix as they transitioned into streaming, into SodaStream when I saw that it was going to be in every home, et cetera, et cetera. And so 15 years later almost, it has been by far the most powerful skill in my life. And he was so accurate about the power of turning money into more money, just as an aside, that at a certain point, I asked myself the question, what if I could take that and fuse it with the other things that I love doing, which are creative writing and peer tutoring, and create something that can do for any normal person what he did for me. And so I man-birthed Find Fat Fish, and I have been helping people invest in their first stock and build their portfolios and basically start investing their own money with the intention of making significantly more with this hobby than they earn in their jobs until they no longer need those jobs and can spend their time how they like.
Nice. That's good. So it's kind of like a bit of a rich dad, poor dad story, except there was no poor dad. It was just a rich dad and a boat, right?
More or less. More or less.
That's awesome. And you kind of loosely, probably jokingly describe yourself as a bit of an anti-financial advisor, which I find fascinating, because I myself am a financial advisor, and I feel sometimes like I'm an anti-financial financial advisor, and it's just like, yeah. So tell me about that attitude, or that where does that come from? What makes you passionate about kind of raging against the machine in a sense?
In a sense, I would call myself an anti-financial advisor in the same way, just in the same vein as I would call myself an anti-financial professor. I spent some time in LA, and I was considering going to business school rather than starting this. And in retrospect, that just would have been a fear-based move, arguably like very highbrow procrastination. And I was sitting down with this guy who runs DreamWorks Animation, basically, and he put it in perspective. He was like, I hear what you're saying, but keep in mind that academic is an antonym for practical. And as time has gone by, I keep realizing that like sitting around studying something for 2 years is exactly how I didn't learn investing. I went from not being invested to being 100% invested in Nintendo in 24 hours. And I have been heavily concentrated in a small handful of stocks ever since. And so for me, it's like, if you consider, like, there's nothing about what I'm doing that makes me be like, I'm smarter than any of these people. It's not the case, but I don't think that there are a small handful of people that could help other people better than me just by virtue of my training regimen, where there's been no theory. It's just been, you've had 80% of your money staked across a couple of companies for 15 years, and then you've been traveling the world helping other people do exactly the same thing with success. And so for me, it's like, it's not, like if I went to business school, do I think I would like coast through? Probably not. I would probably get so bored during macro and microeconomics that I would have trouble and like get into classes with the professors. Like there's no reason that I would be good at any of that. And as the CFO of Zoom said, she was like, if I could pick stocks, I wouldn't be a CFO. And that's one thing that I think that goes back to the lazy intelligent thing, right? So like she is intelligent and hardworking. And that's exactly the implication of what she said. Whereas the people who are investing in it, probably to the last man, to the last woman, are lazy and intelligent, where they have absolutely no interest and probably not even the wherewithal to run the company. But in terms of just directionally sizing up risk reward and taking bold action with incomplete information, they can do that in a way that's sort of like the lawyerly, the professorly, the accountantly archetype either couldn't or wouldn't. And so to me, that's the difference. It's not like some like puffed out chest, like intelligence competition. It is more temperamental differences in understanding what if the average person watching this could get from one person versus the other.
Yeah, I hear you. So there's something about that whole intellectual piece, right? Like having knowledge, being academically inclined, and then it's very close. And not to disrespect anybody who is intelligent. You know, I'm trying to get there eventually, but it's definitely not on my high priority list.
That is what intelligent people say, though.
True.
They leave the loop.
But fear and intelligence, certainly they have to be related, right?
That's interesting. But do you mean that if you're more intelligent, just by virtue of having a more vivid perception of things, you'd be more afraid?
Yeah, or sometimes if you fear something which is unknown, you seek to know it. Therefore, by implication, you're kind of decreasing that fear level. That's the idea. And I think that there's a certain degree of fear in place which drives people to consume more knowledge. And then once they're in possession of that knowledge, it binds them. They actually can't move forward because they feel like they need to know where the ground is, right? But when they get all that information, knowing where the ground is actually doesn't help if you can't swim.
Hell of a good point. That's actually, there's two things about that. One of them is in terms of how to use emotion in investing. And I think about this all the time, like to what degree when I've done it particularly well before I even had a methodology, what worked and what didn't. But and then when I teach other people, when I sort of reverse engineer that for other people, the first thing you want to do is you want to put emotion into it so that there's a purpose for why you're doing it. And that kind of finding your why and all of that good stuff and looking at your beliefs and your aims, etc., will enable you to sort of walk into the fire and be persistent, take bold and patient action. But then once you've sort of fired yourself up, it is then crucial to take emotion out of it by having a system that you've made every important decision up front, preferably before you've invested a dime. And that way, there's nothing that's going to come along and surprise you. You're prepared to, at the very least, be neutral and sort of psychologically oblivious during a crash or during a boom or whatever. And then the last thing is, if you can't ignore emotion when you're in the thick of it, you've got all your money invested, that's when you think about exploiting it. In the way that Buffett talks about be greedy when others are frightful and frightful when others are greedy. And Sir John Templeton said that bull markets are born on pessimism, rise on skepticism, mature on optimism, and die on euphoria. You are, because you've put emotion into it, you're paying attention, but because you've taken emotion out of it, you are in a position to sort of profit from mass panic.
That's good.
And that is one thing. And the second thing was somewhat related. I guess these are cousins as ideas, is thinking that there are 4 types of information. There is informed pessimism, which is worthless and everywhere. There is informed optimism, which is dangerous and everywhere. There is informed pessimism, which is the realm of what we were talking about before. That is, you collect this and it keeps you safe, but it also keeps you scared and on the sidelines. And that is also, it's niche. You might have to pay $150 an hour for it, but it is still all over the place. And the last piece of it is informed optimism, where it is that 1 or 2 pieces of information that enable you to take bold and patient action when the rest of the world is paralyzed. And essentially, like in a nutshell, that more than anything else is what I help people find for themselves on their own terms. Because if I give it to you, it's worthless. I can excite you into making an investment, but then like 3 years down the line, it goes up 200%, it drops 50%, you're out in either direction. And so it's like it needs to come from you. And informed optimism, I think, is probably the most overlooked and precious asset in the universe. And actually, to that end, when I was going through your interviews and some of your writing, when you say that good debt is what I'm all about, you kind of like, I detected somebody who had that informed optimism that I have in other areas. And for me, it's more like concentrating versus diversifying. I have a ton of fact-based faith, as I call it, for why that's a good idea. But when I was listening to you, and you had a line in Hatch in your nose triangle article that made me laugh out loud and know that we were destined to cross paths, which was that you have so much debt that grandma's butt would pucker if she knew. And I'm like, that's written by somebody who is in possession of some kind of informed optimism that's allowing them to do something that to anyone else would seem insane. And that's one thing that I wrote in the Hatch thing. I do appreciate that Hatch article, by the way. They gave me some really helpful prompts. They made me do some thinking. And one of the things is like the difference between perceived risk, what seems dangerous, and real risk, what is dangerous.
Yeah, tell me about that. Yeah, break that down, because I read that as well, and I was thinking, well, surely risk is risk, right? But what do you mean when you say perceived risk, and then flip on it over and talk about what real risk is?
So if people are going to talk about how investing is gambling, which is such a broad statement, it's insane. But if stock picking is gambling, right? And usually the people that are espousing these things were told it by somebody 30 years before and then made the decision that it was true and never sat and actually like questioned the assumption. It's at the core of a lot of people's misery in all of life, really. Yeah. But ultimately, as somebody who started gambling when he was 6 on football and started investing at 22 and has been essentially all in since then, I can tell you with a certain level of authority that they're not the same at all. And gambling is so much harder than investing if you know what you're doing with either of them. And like I have immense respect for the sharps that can make a living gambling. And the only reason they're not billionaires investing is because it would be so boring for them, they couldn't even tolerate it.
Yeah.
Like for me, I gamble on UFC fights just to keep myself sharp for investing, just because I lose all the time there and I don't lose all the time there.
Yeah.
But essentially, if you bet on a sports game, there is a 50-50 essentially that your money will just poof, go to zero. And if you're using a bookie, you have to pay an extra 10% of the bookie. So it's really, really easy to be out with gambling. Whereas with investing, there are situations such as shorting a stock, margin borrowing, etc., where your money can, or options where your money can poof to nothing, or you can lose more than you have. But if you're just investing for the long term in companies that aren't going to go out of business, it is mathematically impossible for your money to drop to zero. And so to compare the risk reward of those things as if they're analogous tells me that you don't have the practical experience that enables you to back that up with even rational thought, even like 101 lateral thinking and assumption questioning. And so for me, like that's probably what I was thinking. But for me, I would ask you, like, so when you say, was it good debt is what I'm all about?
Yeah.
For me, I am comparatively, if not absolutely, a tremendous coward with respect to debt. Like, what is the informed optimism that makes you feel that way?
That's a good question, because it isn't. And when you mentioned emotion before, emotion is kind of like a booster rocket to get you there. Then you need to get rid of it, right? So that you can sustain it on, I guess, informed optimism from there. Mm-hmm. And I don't know where it actually originally came from, but going back to when we even bought our first property, it was just this belief that I knew that based on the environment, like almost like looking at clouds forming on the horizon, I knew that the cost of money would inevitably get very close to zero. I didn't realize that it would get there this fast, but you can't really say that was purely just based on analyzing information and coming from an economics background and connecting the dots. No, it wasn't that simple. It's more like you have a belief. It's like the substance of something that's real that you can't yet see. And when you make decisions on that, you can withstand the emotional barrage that comes with you when the environment that kind of throws a curveball at you, because underneath that, that at least for the time frame that you're going to be in the market for, that somewhere else you're drawing on this strength that a certain event will happen. So I think it's how to translate that right into different arenas. My challenge has been, how do I translate that into looking at companies? And if I was to, because I own some individual shares, but it's not the bulk of what turns me on, not yet anyway. But how do I translate and obtain that faith in that space to actually execute it somewhere else? That's probably where I fall down a little bit, if I'm honest.
Good for you as someone who can say that you're a financial advisor with all of the acronyms, that you're like, frankly, man enough to say, I don't know and I was wrong. I've never heard you say I was wrong, but I'm sure you're capable of saying it without self-worth.
I'm capable. My wife tries to make me capable of that every now and then, and I do my best.
I hear that. But yeah, so but the ability to, as Charlie Munger says, rub your nose in your own mistakes so that they don't happen twice. Like that is another thing that you just don't see in a lot of the people who know what they're doing analytically. But when push comes to shove emotionally, the human penchant for self-sabotage in terms of fusing emotional intelligence and financial intelligence is so bottomless and infuriating and tragicomical that I know I'll be spending my entire life on it, even though there are other things I want to do. Because like that is what is hurting so many people, and that is what is, in a lot of ways, if you think that the net worth gap is hurting society, that is what is hurting society so badly, is that there's a small number of people who have that dialed in, where they are playing the game correctly, analytically and emotionally at the same time, but then without regard for passing that on to other people.
Yeah.
And
yeah.
That's how you get to a point where, like, I mean, I'm sure if you follow U.S. politics at all or anything, you're hearing this, but like they're making it a political issue that Jeff Bezos, I think it probably is true at this point that Jeff Bezos has more money than half of the United States combined.
Yeah.
And that's not necessarily Jeff Bezos' fault, right? It's like I just transformed e-commerce, but it's like, but the problem is the only reason that he personally has more money than 160 million people, more probably now, is he's only made that money through one source, owning shares in Amazon. And every single person on the other side of that, the 160 million people, are probably actively assuming that stock picking is gambling.
Yeah, yeah.
And so it's like the disparity of the intellectual and the emotional wherewithal is it's just flat horrifying. And to me, one thing I would say, I'd be fascinated in your opinion on this, because you have so much more visibility, certainly into the New Zealand market. But for me, it's like, I actually talked to Natalie Ferguson at Hatch about this, and she agreed. She had really interesting things to say about how finance compares to fitness as industries. But essentially, to me, like, I think about the world, like, imagine the world of physical fitness if nutrition best practices weren't mainstream. Like, hydration is good for you, sugar is bad for you, and if personal training didn't exist. Like, that is actually where the world of financial fitness is, where the things that are good for you aren't even mainstream, and there is nobody who's coming along and can, like, be somebody's PT until they're in shape. Basically, what's fascinating to me that the people that are doing the biggest things are 95% of the time described as being dumb and incompetent. And, like, the narrative on Bezos still is that he doesn't know how to make money because of their PE ratio. And it's like, come on. It's like, he is the greatest capitalist of all time, as evidenced by the fact that Amazon, I mean, I can't even imagine what that's going to look like as an ecosystem in 10 years. And you're telling me that guy doesn't know how to make money.
Yeah. Well, it's the same thing with Elon Musk and Tesla and all the short sellers, right? Like, clearly at some stage you need to acknowledge reality. And if your paradigm doesn't match with reality, guess what needs to change? It's not reality, it's your paradigm, right?
Yes. I mean, good call. For me, it's like, I mean, this bridges into sort of like the motivational speaking, which I would be versed in doing. But essentially, like, if you don't like what you're getting from the world, don't blame the world, change your approach. And for me, like, one thing that's been really fascinating doing this and, you know, offering the service that I provide to people in of various different levels of, the way I think of it is resources and urgency. And you're trying to find that sweet spot of people who can help themselves and genuinely want to. And one thing that's actually, like, fascinating, but also disturbing is the quantity of people that are so attached to a victim mentality that they don't actually want help. They just want to complain about it at length as if somehow that's going to change something.
Yeah, find somebody that agrees with them so that they get critical mass, and eventually they'll be right if they say it enough, right? Just talk it down.
Yeah, that makes way more sense than what I had as the rationale in my head. Something like that.
Yeah. Okay. So, and the whole issue of I guess being fair, right? Like, it's not fair that, you know, Tesla was trading at just under $300, and everybody was telling me that, you know, it's not worth that much. And then all of a sudden it took off. Well, the whole system must be rigged. You know, it's because of the Fed pumping more currency into the system. The market's overhyped. It's all these millennials on Robinhood getting in, and yeah, there's an element of truth there, right? But I guess if those are the reasons why you're not optimistic, why you're actually disinformed and you don't play the game, then who's actually going to lose? Is the stock market going to turn around and go, oh, yep, you're right. Sorry. Let's just be a bit more calm and fair and give you a chance. That's not really going to happen, is it?
That makes complete sense. Basically, everything that you said struck me as uninformed pessimism, and maybe some of it was informed pessimism, but in either case, what it isn't is that one slice of information that lets you actually do something.
Yeah, that's good. That's good. So tell me, like, if you were to, and what I might do actually is I might just pull up this question that we've got here. Just open it up here from Barry G and Snuggles. Awesome. Sounds like a terrific relationship you have with Snuggles. So what is the resolution to investing wisely for beginners? So I guess this comes down to just breaking this all right down, because we've been kind of, you know, talking on a certain layer here. But if we were to say to, and be mindful, the name of our show, the Everyday Investor, right? So like if there's a beginning investor who wants to actually back themselves, they have this faith that what this company is, what this product is that they're using is going to be real in the future. What's a really practical example of what someone could do? Because I'm just mindful that the environment has changed so much. It's so easy to get into the market now. What would be your advice to the beginner?
I mean, one of my mantras is invest in your addictions. So like, what is something that you have used? Because we're talking about as a first investment, it makes sense to go for a base hit before you gun for a home run. I don't know how far baseball metaphors go in New Zealand, but basically, it is so much easier to find the next Netflix if you understand Netflix like the back of your hand, that kind of a thing. And so, you know, like Fang stopped being Fang the second it became Fang. So Facebook, Apple, Amazon, Netflix, Google. And so like, find me something. If you want to find the next Fang, you would be really well served to understand them as products, as companies, and as stocks. And that's one thing that I would want to discern for the everyday investor up front. It is shocking to me I mean, I don't look at financial TV, but if I do, it's maddening. But even like you read reputable financial journalism by probably hardworking and intelligent people where they fail to compartmentalize between the product, the company, and the stock. And that is extremely problematic as a baseline mistake because you don't even realize the cause and effect of what you're doing. And so ultimately, this will sound so obvious, but this is a mistake that's being made at high levels. The company is selling the product to consumers and it's selling the stock to investors. Everything that happens to the stock long-term will be a reflection of the company's success or failure, probably as determined by the product's popularity with users. And so if you want to understand an investment, it makes sense, especially if you're coming at this from a place of intimidation, where like financial jargon scares the hell out of you, which is totally understandable because I believe that it's being weaponized in a lot of ways to keep people on the sidelines, keep them doing stupid things. So basically, like for me, Nintendo was the ultimate starter investment for me. I've been playing Mario since I was 5. And basically my thesis was, this is great because if you're telling me that if I go like this, Mario goes like this, I was like, that's going to be famous all over the world. Like that's going to be huge the world over. And it was a really interesting first investment. And I was fascinated by it on a product level, which then gave me the wherewithal, emotionally and also intellectually to want to learn the company and then beyond the company, the stock. And if it hadn't been for the product connection, I mean, like I remember the first time that I did investor relations research and I was actually learning about Nintendo, the company, they brought up the example of the razor and blades business model. And if you had tried to teach me, and I would be willing to wager you too, if you tried to teach us that out of a textbook in like a microeconomics class, I would want to die. I wouldn't be able to stay conscious. But if you teach me razor and blades model through the prism of Nintendo, telling me that where Nintendo's telling you that we're actually even better than that, because usually when a company sells a razor, it loses money on the razor, but it makes money back on the blades. We make money on the system and then on the games, the controllers, the licensing, etc. Like therefore, we are better than a razor and blades. And so that was just one way. There's just one term that just stopped being a mystery to me through the prism of something that I really enjoyed and something that I was really intrigued by. And of course, like if you're going to, and this is another thing, this is a major problem with the everyday investor for sure, is an aversion to putting skin into the game. I've seen people diversify a lot lately, actually. People create like 35 little positions rather than a couple of bigger ones because they're so unconfident. And so they don't know what their favorite investment is. They don't know what it feels like to have confidence in an investment, which is crazy if you think about it, considering that your investments ultimately represent your entire life's work financially. And people don't even know what it's like to have baseline confidence in one of them. And so for me, what I mean is the best way in is by loving a product so much that you're intrigued to learn. You actually want to learn about the company and then you want to learn about the stock. That's your way in, and any other way will strike you as like homework or esoteric, such as the word esoteric, etc. And so like, to me, that'd be the main thing.
Yeah, because I think like I'm just thinking about my own example of how I didn't buy Tesla shares, but I bought a Tesla and I'm totally into it. Yeah, like you'd think, right? That's a classic case of I know the product, I love the product, so easy for me to learn about it. Yet, why didn't I connect the dot that, hey, if I love this, surely I can see that electric cars are the way of the future. We don't even own any petrol or internal combustion engines anymore at all. All my power tools are electric. Everything's electric now. So on that basis, why the hell didn't I actually back myself and put my own skin in the game with what I believed? There was this incongruency between what I really believed and how I behaved with my money in that example. And I guess that's probably a common theme that a lot of us have, right? Like we probably make it way more complicated than it should be, right?
Well, to me, it's like it is literally a tragic comedy where you have people going on their MacBook using Chrome and then binging Netflix to escape their money stresses, when meanwhile, those are three of the most successful stocks of our time.
Yeah.
And so it's like, these things that are right under your nose, it is just like, it's right there. But the problem is there are layers of sort of strategy and sleight of hand that are not easily communicated over a podcast. And even if they were, it's kind of like telling somebody like, yeah, you should probably expose yourself to things that make you happy and not expose yourself to things that make you feel sad. It's like, it's easy to grasp, but to actually like do on a consistent basis, especially under pressure, is hard. Yeah. But like, in terms of going from not being an investor to being an investor, like I said, invest in your addictions. And this is so crucial. Buy one share of one company within 30 minutes of having that aspiration.
Nice.
Because basically for me, it's like one thing I ask people is like, what's to keep you from doing that? And clearly you see, because there is resistance there for anybody, it has nothing to do with fear of losing the money. There's something else at play. And whatever that is can vary depending on the person that you're talking to. But we're talking about like deep-seated archetypal identity stuff. And, rather than like, be the intelligent and hardworking person who writes a dissertation about it, it's like, just like look into your own self and be like, well, why can't I literally risk $100 on this thing that would be literally infinite progress over not doing it at all? And like that, overcoming that sort of fear. I've been thinking about this the other day, actually. People ask like, what book should I read? My answer typically is book. Until you have 5 years of experience, books are the last thing you need experience. Do not prioritize analysis over experience. That is the way to never do anything.
Yeah. But, yeah. And there's some, like, just to pause you there, there's going to be some people that are saying, what? No way, man. That's totally wrong. You need to educate the hell out of yourself. You need to get advice from these really qualified people. So, like for you to say that is quite, it's a salty statement, right? Like it actually, you can taste it. That's refreshing, but we don't hear that, right? Normally we hear diversify, buy an ETF, don't concentrate, just let somebody else manage it for you.
To me, what's fascinating about that is like everywhere you look, like to me, I do not see a mainstream counter argument to diversification anywhere. In a world where contrarianism is supposedly good, you don't see that anywhere. And the thing that you do see everywhere is like what Warren Buffett eats for breakfast and like, like what to do. And like, meanwhile, if you don't have any experience and you're just being buffeted by these Buffett quotes, etc., it's really easy to be like, yeah, richest man in the world, etc. And you're not doing what he and Charlie Munger say to do, which is to invert, always question your assumptions. And if you actually invert and you think about it, he has said that if he were not Warren Buffett, he would not invest like Warren Buffett. He said that the best returns he ever did were in the 50s when he was averaging about a 50% annualized return. And he said that if he had the privilege of investing $1 million rather than billions, he guarantees a 50% return every year. And so for him to say that and to be loudly echoed by Munger and Peter Lynch and some of the other like greatest investors of all time, for people still to be harping about, invest in Warren Buffett, what's Warren Buffett doing? It's like, how are you missing the point this hard? And it's because they're throwing themselves into the theory before they have any experience to defend themselves with.
Like not like being completely wishy-washy and friendly with everyone, not actually having an opinion, right? You'll just be swept along with what everyone else is doing. You want to play the game like everyone else is doing it.
That's it, man. And I think that it depends on what is your main fear. Like I was saying before, if there was one book that I actually think people should read in the context that we're talking about, it would be the book The War of Art by Stephen Pressfield, which is basically a book by a writer that wrote a book about procrastination to procrastinate writing a book. And like it's the best book on procrastination ever written. And like to me, that's much more at the core of the issue than like not knowing how to read a financial statement. At the end of the day, obviously, there's a minimum effective dose that the everyday investor should know how to do in terms of being numerate. To not be numerate and to not prize numeracy is also a major and horrifying problem that I see. Where like it's not like if you're not numerate, that's as big of a deal as not being literate. And that the results of that are plain to see across probably global civilization. But in any event, yes, the antidote to that is to get experience. To me, it's like the resolution should be become an investor with 10 years of experience as quickly as possible, and then you'll be able to sort of like have a perch to evaluate all this from and not feel like you're overmatched.
Got it. And having a bit of a dabble or just having a bit of a punt, putting a little bit in versus going all in on something which you have a firm conviction on. Talk to me about that.
That's a really good point. It's like how much, because there's a misperception that you need to go from all out to all in. That is like asking somebody who's never touched a drop of alcohol to like funnel a keg. Like you just can't do it. It's a temperamental thing. And so for me, like there's like, what is that right series of investments? And so for me, literally in the beginning, for reasons I've already articulated, it is infinite progress to go from not owning any stock to owning one share of one company that you love. That is infinite progress. And one question just to help people with that is like, find something that sits in the middle of what am I experienced with in the past, addicted to in the present, and intrigued by for the future. And that kind of a thing, that's a really, really good first thing for you to do. Not saying it's going to be some life-changing thing, but in a way it is, because to go from not being experienced to having some experience is. And then, and then secondarily, and I can't emphasize this enough, people seem to be really, really averse to putting skin into the game here. They somehow want all of this to be free and instantaneous and riskless. And like that's not how any of this works. You need, at the very least, you need to be willing to invest real skin into the game, even if you've methodically removed the risk, which is what I help people do. But it's like I think that, and obviously, this is just a theoretical piece of advice. This is certainly not financial advice, but I think if you're trying to move the needle in your own life by investing, like first of all, thinking like, what is the objective of this session? For most people, there are exceptions, but for most people, they just want options. Money is options. They want optionality. And so for me, like a decent goal that will actually put other things into perspective is like, can I take a month of my expenses and invest it in such a way that it can buy me a year of my freedom? I could go on a sabbatical, I could do whatever. And like that, or that could be my first year of retirement, and now we just keep building from there, whatever it is for you. But like turning a month of your expenses into a year of your freedom, to me, makes a lot of sense once you have a bit of a baseline.
Because that's quite a lofty goal for some, maybe who are thinking about this for the first time. Do I invest, or do I just wait for someone else to tell me what to do and then blame them for when it goes wrong? Or do I actually back myself and do this to actually say, right, well, let's take a month's worth of expenses, and our first goal is to turn that into a year of freedom, basically, right? And if you can,
it won't happen, if you're hoping that'll happen for you in a month,
right?
You know what I mean? But it's something where it's like, this is a nexus investment where like this cash will never, this investment will never again be withdrawn from the portfolio. Like this is now my investment dollars. This is my nest egg here. That makes sense as a first move. And then let's see what we can do. And naturally, if you invest it intelligently in a concentrated way, it will become a year of freedom much more quickly than if it's diversified in such a way that you don't even know what it's invested in.
Yeah. Yeah.
That's so problematic for so many different reasons.
Yeah. Yeah. And it's refreshing, to be honest, to hear that opinion, because effectively, I think for a lot of, well, there's just a lot out there which really promotes passive index ETFs. It's good. Yeah. Don't get me wrong. But if that's the only option, that's not that exciting, to be honest. Like for me, that's not that engaging. It's great to know that at least I'm getting the market back, but at some stage you're going to need to get you're going to need to get something more than just what the market can give you, if you want to actually take this seriously and make a good go of it, right?
Yeah, and I think ultimately the core skill, well, stock picking is selecting the investment. It's like playing chess. It's like, it's interesting, it's analytical, there's nothing at stake. Emotion and investing is the emotional act of putting money to work and then trying to be calm when everyone around you is not.
Yeah.
And so those are very, very different pieces, and you need to build both of those skills simultaneously. Like paper trading is complete nonsense because you can become evolved as a stock picker in theory, but you don't know anything about yourself until there's money in the pot.
Yeah.
And so, it's crucial. It's crucial that you do both if you are for real about elevating yourself. And I can tell you beyond a shadow of a doubt that anyone listening to this who's committed to do it can do this, can learn to do this successfully. This is not, you don't need to have whatever station in life people are envisioning or whatever level of like busy work and horribleness. Like some people visualize that you need to like develop the chops of an accountant and a day trader and like you need to like know all the terms and be watching stock charts all the time. Like it's just so divorced from reality of how this actually works. That people are just psyching themselves out and they're so afraid that they feel so overmatched that they just don't question the assumptions that are keeping them on the sidelines. Like you can do it. It's just that you need to work your way in. You need to accumulate experience. And like I said, the reason that I do what I do is because I think that there should be somebody who is helping people shave a decade off of their learning curve. There should be some PT in there that is like, listen, like you're doing that deadlift wrong and you're going to break your back. Like I will help you. I will help you until you don't need help anymore. That kind of thing. You don't necessarily need it, but for me, like that reminds me of the book The Catcher in the Rye. It's like, to me, it's like, who's looking after the 54-year-old who's like, I've accumulated some money, but this will last me like 4 or 5 years in retirement. And like, I really need to make hay with this nest egg during my last eligible 10 years of employment. Who's looking after those people? And I can tell you basically beyond the shadow of a doubt that nobody is. And so for me, like that's, when we talk about the resources and the urgency, like that's it. I'm happy to talk to people that are interested, but there's a difference between being interested and being like, I do not have time to like sit and try and wade through the intelligent investor. Like there's no, you know what I mean? That period of procrastination is over.
And so, like, obviously, the way that you approach this, it's come from somewhere, and we've already mentioned the education that your father gave you on that cruise ship. So, what and not just thinking about your situation, but just with people in general, what kind of role do you think our parents play with our financial education? I know it's a basic question, but we're often getting most of our guidance at a very early age. So, do you think that that's actually a significant stumbling block for many everyday investors?
I do. I definitely do. I think that in a lot of ways, especially until you stop, like you zoom out and you think critically about this, which a lot of people just aren't wired to do, either by nature, by nurture, or by their current situation. But like you will instinctively do things that your parents did by like genetics, but then also by the way you were raised. So it's like a pincer attack. If those habits were good, then obviously it's a multiplier effect. If those habits are bad, then it's a multiplier effect. And it takes, I think, a significant amount of trial, error, and like reflection and adjustment to undo any unworthy habits that were imparted to you as a kid. I don't know, thinking about it, I can't imagine anyone that would have a bigger impact on you. Like your group of friends, really not so much, right? Like, but even by the time you have like your circle in like middle school or high school, everybody in that circle had a different like monetary personality. probably at that point.
Yeah, agreed.
So,
I
yeah.
agree.
So for me, it's like, but it is interesting. Like, at what point in what areas do your parents have conflicts, and then which way do you go? Like for me, like I've tried to, as we all do, I've tried to take the best of my mother's side of it and the best of my father's side and blend. But I definitely, like, the bad habits that I have that come to roost are definitely more on my dad's side. We're kindred spirits in some ways.
Yeah, good one, Dad. So, so he was obviously into. I think you mentioned at the start he was into what, gold and oil, and he was probably had in his mind a version of what investing is and what he wanted you to learn specifically, and then he would probably have an expectation of what you would do with that knowledge. Yet you went out and invested in Nintendo. So, like,
and that's what's funny about the story. It's like sometimes people, and this is where, the victim mentality, bad assumptions, whatever, people hear the story and they're like, oh, I wish my dad did that for me. I'd have a different life. I'm like, you didn't. I was like, I'm like, that's like the basic part of the story. Like, he came in, taught me that, and was so disgusted by my choice that he was still mad at me. And so even though I went into like some of the best investments of our time, it was still a disappointment because he wanted me to do it like he was doing it.
Right.
And I will always, I mean, like, it's one of those things, just him getting me started, that was the service of a lifetime. If he hadn't done it, it wouldn't have happened.
Which is really interesting, right? Because like you'd think that the whole goal of that, or from his perspective, was you wanted to design the way that your life would go in that aspect in a certain way. Yet what he birthed in you was so much more valuable. He effectively birthed a contrarian, right? Like that, a critical thinker, someone who is actually right. You got enough. You got the first bit right in the first session, and you ran with that. And I think that speaks volumes to, I guess, the everyday person thinking about getting in. Is that, look, you just don't make it too complicated. You've got a little bit of it. Now let's see where that goes. It might be completely the opposite of what that person is saying for you to do. But for you, it's what you needed to hear at just the right time, right?
I couldn't agree with you more. And that's another thing, is timing is objectively everything. Like, if it's not your time, it's not your time. But it's one of those things where the quicker that you can be a 10-year veteran, the better for you. And you don't need to be a gajillionaire or even necessarily like 1,000-aire to make that happen. Yeah. But what's really important is that you have the knowledge and the self-knowledge that enables you to manage your own money in a thoughtful way. And this is a one that's really hard, because I know, using different like sort of psychological models, whatever, that like at least half of people, the major fear is just not fitting in. It's like poverty and not fitting in. And like, if that's the case, your need and desire to be part of a pack basically guarantees failure at investing. Then that's immensely problematic, because you're so easily manipulated if people know that you won't drift from what people are saying. So for me, it's like, I would actually maybe add it to the experience with it in the past, addicted to it in the present, intrigued by it for the future. Try and pick something where it pushes your comfort zone in terms of it's kind of a niche thing that maybe you don't tell your friends about or something. And that way people would like look at you side-eyed if they found out what you were invested in. Because ultimately, if you go around telling people what you're investing in, which I used to tell anyone who would listen, and I don't tell anyone anymore because it hurts them, is if they don't look at you like you're insane, it's probably not a great investment. Just ask the guy who's worth $200 billion who apparently still doesn't know how to make money.
That's right. It's funny that way. Like, and it's true though, right? Like, if you're not uncomfortable alone and yourself and what you're doing, and if you're not uncomfortable when you're around your friends about what you're doing, with respect to money, of course, then maybe that's a signal that you've succumbed to peer pressure, and you're basically fish bait rather than making the fish bake, which is what I think you wrote about. And I think that's probably a good segue to kind of go back to the intelligent, lazy investor. Can you just quickly tell me a little bit about that and the 4 different types that you've written about? And I'm going to put a whole bunch of links in our show notes so that people can click on some of these cool articles that you've written. But tell me about these, the 4 types of investors that you've outlined there.
Oh, that's, I mean, kind of you. That honestly, that note, that quote from the 80-20 principle, quoting that guy on the Nazi dream team, just it made me laugh so hard because it's just so accurate that I guess like if you were going to create sort of an Eisenhower matrix of like what is an intelligent action, what is an unintelligent action, what is a lazy action, what is a hardworking action, like each one of them, like you could think about like what falls into each of those squares. For me, it's like if you're not able to discern between a high value action and a low value, then that's not intelligent at all. And a lot of the time, the low value actions are busy work, where the high value actions are much either more fun or more efficient or whatever. But I mean, like, you know, if you're checking stock prices, if you're addicted to your phone and you're causing yourself like it's like become like a drug addiction, looking at these stocks bounce up and down. Like I'll give you a guess which one that is. Like if you're doing things that are destroying your dollars per hour, and it's just like what is the absolute through line to spot like identifying, researching, investing in, and then continuing to invest in the next Amazon, the next Netflix, whatever. That is obviously in the intelligence side, but then how do you do that in as few moves as possible so that you're not living in front of your computer? Like there are these people who are like running advertising campaigns like for their trading education courses and stuff. And like there's a place for day trading. I wouldn't bag on it totally. There are smart people who do that. I know some of them. But in general, the dream is not to be in the jacuzzi with a laptop. What?
Yes.
It just doesn't even make sense. Like the dream is to double your income as a hobby by doing less than like 10 or 20 hours of work a year. And that's, you know, that's what I've been reverse engineering and doing for 15 years, helping other people do. Like what is fat on the bone? And I promise you, it's like almost everything is fat on the bone. And if you can't see that that's true, you need to ask yourself why.
Yeah. And I guess that what's the shortest line between a good outcome, right? That's kind of what you're talking about, right? Like we know what the outcome is that we want to achieve. So give yourself permission to take the shortest line because, hey, you don't actually have to follow these so-called rules and so-called best practices all the time. Again, if you back yourself, you've got a faith in this, then just follow a straight line. That's pretty much it, isn't it?
You nailed it. And there's a really interesting book that I'm reading right now called The Power of Your Subconscious Mind, which is a lot of what we're talking about could be encapsulated in that book, which is very different from the tone of this conversation. But he said two things in the book that you've also said, great minds think alike, you know, is that most people have no invisible means of support, and most failure comes from insecurity and overwork. And basically for me, like my trajectory just in terms of growing as a person is getting my other systems as clean as my investing system. And when you juxtapose them, a lot of and this is the case with anybody who's really like, if you like your most evolved skill, if you compare it against skills that you don't have that level of exposure and practice with, obviously it'll be embarrassing by comparison. But it's like, how clean can you get it that it is really getting you where you want to go on a consistent basis, and it's requiring less effort than like your 75th favorite hobby? Like that's when you've got it dialed in, and there are people who have that dialed in across all different walks of life. And investing, I just so that people know that like that is achievable in this field if you are willing to ask yourself some hard questions and sort of pivot from interested, which is important to be in the beginning, but then like too committed. You can do it, but it doesn't happen by accident, obviously.
Yeah, that's good. So I think that pretty much brings us to the end of our time here, Cole. But do you have what's the best place for people to kind of follow you and find out a little bit more about what you're up to and what you do?
If you go to findfatfish.com, it'll be pretty straightforward. like I said, if you're committed and not just interested, to join my mailing list. If you're just dabbling, please don't do it. But if you're genuinely interested, join my mailing list, and you will hear some things from me, and there'll be some new dimensions to what I'm doing that'll come out during the fourth quarter of this year, and you'll be privy to it. But yeah, I appreciate lovely getting to know my triangle nose contemporary, and I appreciate the platform. It's been fun.
Awesome, man. Awesome. Well, you're doing good work, Cole. So please do keep it up. That's awesome. Cool, man. Well, thanks again for your time, and I'll put some links in the show notes for anybody who wants to find fat fish. Just click on that link and find out more. Awesome, Cole. Thanks for your time today.
No, thanks for having me.
Good man. Cheers.